I learned from that is that a tenant is actually a business partner. When you sign that lease agreement with a tenant, you're entering in a business contract with that person. You want to make sure that this person is not a bad actor, has good moral compass, has good financial stability, responsibility, and that can be traced by their track record. So you want to do that background check.
Today on the show, I have the pleasure of speaking with Charlotte Dunford. Now, Charlotte first moved to the US at the age of 16 by herself from her home country of China. Through a strong drive to succeed once moving to the United States, she went on to build a path and a career of her own, building her own company alongside her business partner. She started Jones Creek Capital in early 2020. And from there, she has grown and now has an investor portfolio base of over 5 million people subscribed in her deals. Charlotte is also a certified associate in project management and speaks fluent Mandarin. And in her spare time, she enjoys playing the piano and doing equestrian or sports. I'm really pumped and excited to hear her story and her incredible background. But enough of me. Let's get her out here. G'day, Charlotte. Welcome to the show. How are you doing today?
I'm doing well. Thanks for having me on.
My pleasure. We were talking in the green room before we got started about your origination of your name, and it's always, for those people out there who don't know, a lot of Chinese people come to the US or any Western country and have to change their name, which I think is a little bit arrogant, but it's I love Charlotte as a name. Do you want to give the listeners a little bit of a background on where you got the name from?
Right. So when I first came to the US when I was 16, I did not know much English. So when I first arrived, my host family asked me, "Do you have an English name?" So I just literally came up with it on the spot because I just watched Charlotte's Web and I just had Charlotte. And what really throws people off is my last name, Dunford, but that's because I married, my last name is Dunford. So that's really confusing for people when they say this is Charlotte Dunford and they look at me, they think, what's going on? Even in the American citizenship courtroom, they announce everybody's name and I was the only one that had an English first name and a last name.
Yeah, it's very interesting. That's I didn't even think about that. So essentially, your whole name has changed now from when you were born.
Right.
That's
and middle name.
And middle name. Wow.
Right.
What, just for the listeners, what was your original Chinese name?
So my original Chinese name was Goossens. That was my born name. My grandfather named me. And when I was at age 10, my parents took me to a fortune teller. And Chinese people believe in fortune tellers when they do their names, all the feng shui, all the names and all that stuff. So they gave me a name Hu Jingwen. That's another name when I was changing that age 10. And then I used that name up until I became an American citizen.
Wow. Incredible journey. So with that being said, let's rewind the clock and dive in a little bit more to your background. Can you rewind the clock and tell me how you made your first ever dollar as a kid?
Well, it was actually for a Chinese kid, we celebrate Chinese New Year. So during Chinese New Year, we would be given money after you say Happy New Year to your elders. So I actually made my first $100 that way. Unfortunately, that was given away to my parents, as Chinese parents are very authoritative and they don't really give children that much free space to manage their own money. So I had to give it up, unfortunately. But I did taste the beauty of the dollar while I had it in my hand before I had to hand it over.
And it would have been yen, correct?
Yuan. Yes, yep. Yen is the same character, Chinese character, but yeah.
Yeah. Well, awesome stuff. Well, now let's walk through your journey. You mentioned you moved to the US at 16. Let's talk a little bit about that. Why did you choose to move at 16, such a young age?
Right. So I've always been a really competitive and motivated person ever since I was really little. So I would the things I did as a kid was I would study the courses for the next semester when I was starting fourth grade during the previous summer. So I would be way ahead of everybody else when the new semester starts. But new school term starts at fourth grade. So I was always ahead of everybody. And when I got into high school in China, my desire became I wanted to go do somewhere greater, to the United States. I made my first trip to the United States when I was maybe 11 years old to a summer camp. That really inspired me. I was thinking to myself that, wow, there's a whole new world out there. Because coming from communist socialist China, America was a totally new, fresh environment for me. So I really wanted to go. And during high school, I studied self-studying for the SATs. I figured everything out. I figured, what do I need to do to get into American University? I did extensive research. That was pre Google time. I was soaking myself in the library, reading up on how to get there. So I figured out, going to an American high school would really up my chances of getting to a good American college. So I applied online. The internet existed, but just not as good as today as Google. Search engines weren't as great, but I was able to find a couple schools. So I took an offer from a really small private school, less expensive in Pennsylvania. So there I came.
And your parents were okay with this? Like, just see
No,
you later?
no, they were really worried. I was the only child because
Mm,
I was born under the one child policy and I
yep.
was only 16. So you can imagine as a parent, they had me earlier, later in life too. So their only daughter going away to a country where they don't have any experience. They didn't even send me off to America. They just dropped me off at the airport. So I got on the airport, a layover in Chicago and landed in Philadelphia. They were worried, but they know me. They knew that I was very adventurous. I was ambitious. They knew that was my best future host in America. So they had to let me go.
Insane story. That's most 16-year-olds. I couldn't even imagine. Even when I was 16, like I was pretty, competitive, but nowhere near you like like, and just going to a foreign country, didn't speak the language. Like, that's insane. So kudos for you having the courage to go off and do that. And obviously we're going to get into now the story of what you built today. So just before we, move on, how difficult was it, assimilating to the American culture back in the day, particularly when you're 16 and hormonal and there's a lot of cliques and all that sort of stuff? You didn't speak the language. I'm sure you just wanted to fit right in, right?
Right, right. So it was very challenging and it definitely took a learning curve. But fortunately, I was only 16. So when you came to the United States as a child, it's a lot easier than someone say like they're 50 or 40, to assimilate into the American society. For me, I've always made it a priority that I want to integrate into the American society. So I remember the first day I got there, my lovely host mom, who I stayed with, offered me a Chinese cookbook, and she purchased before I arrived there. She said, which Chinese dish would you like? Even though they're very Americanized Chinese, but they're very, very nice of her. So I told her, I really, really appreciate this. However, I would like to eat whatever you guys eat, starting from the food. If I'm going to be in the United States for the long term and build a future here, the food and everything else, I can't just let myself be spoiled into the Chinese culture. I didn't fly thousands of miles just to eat Chinese food.
Awesome.
So it was challenging, but I tried and tried and tried. And now I would say I am fully American legally and definitely American in spirit.
Are your parents still back in China?
Yes.
Do you get to see them much?
No.
Oh, that's a shame.
They've come here once for my college graduation, but that was it.
Oh, wow. Well, I could only imagine you're yearning to go back and see them at some point. I've got family back in Australia. I'm the only one here as well. And
Mhm.
it's tough being halfway across the globe, particularly as I know you said you don't have siblings, but, other family members, seeing your grandparents, obviously they may be here or not be here, like people's weddings, children that are born. Like it's a very tough to be
It's
halfway across
very
the globe.
tough. My grandmother passed away last year, and she
I'm
didn't get
sorry.
to see me.
Yeah, I'm
Thank
sorry to
you.
hear that. So, with that being said, let's get into what you've built. Jones Creek Capital. Talk us a little bit about where that name came from and how you got started in the real estate world.
Right. So when I graduated from Georgia Institute of Technology with a business degree, so we call it Georgia Institute of Technology, Georgia Tech, the MIT in the South, or what we would like to call it, the MIT is Georgia Tech in the North. So I got into Georgia Tech and graduated, took my first job as a business analyst in the suburb of Alpharetta, only about 20 minutes away from Johns Creek. They're next to each other, the city of Johns Creek, where I reside right now. So right after I took that first job, I started buying real estate immediately. So the drive for that was because growing up in socialist China, you're actually not allowed to own your own property. It's everything is
Mm.
government provided. You can actually pay for it, but it's not really your property. It's all leased from the government for 70 years. So that's why, with the strong family values the Chinese culture has, we've always wanted home. Home is everything, right? So that's what piqued my interest in real estate. So immediately after taking that first job, I used my salary to qualify for deals. And the first deal was south of Atlanta. It was a house hacking deal. For those of you who've been in real estate for a while, you know what house hacking was, and qualified for that deal. And then my second deal was a duplex in the city of Calhoun, Georgia. Did very, very well. Exited a couple of years ago. But when I moved from Atlanta to Johns Creek, the city of Johns Creek, where I live today, I started Johns Creek Capital. So that's where the name came from.
Gotcha. And what is Johns Creek Capital focused on in terms of investment thesis right now?
Right. Johns Creek Capital is a private equity firm that focuses on mobile home parks, particularly small to medium level size mobile home parks. The thesis, really, the strategy is the blue ocean strategy, right? So we're not going after the parks that big institutional buyers are after, which gives us less competition. So we are looking for a higher cap rate upon entry with solid property fundamentals. So those are the most important things. So mobile home parks is basically the closest asset class I can think of is a parking lot. It's a parking lot asset class. You can also think of it as an HOA. So you're really just running on dirt underneath those mobile homes. You're not renting mobile homes. People get them confused, right? So mobile homes versus mobile home parks, it's not the same thing. So mobile homes are like cars, right? So they're personal property. You actually get the title from the DMV for mobile homes. So what we're after is the land underneath. So the solution we provide is the affordable housing crisis America faces right now, and we provide a piece of the puzzle to this big problem that we're trying to solve. And we're playing a major role in that, and that's how we're solving the problem.
Gotcha. And are you buying in any particular states? Are you just keeping around the state of Georgia, or are you moving outside of that?
Actually, most of our parks are in the southeast and the Midwest, and then a couple of parks out in one in Maine, one in Montana, one in Arizona. So we really focus on relatively business friendly, and some in Florida. That's the southeast. So business friendly states, try to avoid those ones with rent control. Because mobile home parks are already low on rent. If you place rent control, you're pretty much placing a cap on how big your. Sorry.
That's all right.
Please cut that out if you could. My cat just entered the screen.
I think that's awesome. We'll keep it in. I like that. I love animals. Okay. My dog's on the floor here in my office today. He's breathing, your dog breathing is heavily.
Well-behaved. My cat is not, as you know about cats. So business-friendly states, not with rent control, because the biggest money maker is really to raise the rents so that it catches up with the other housing options. It's still the most affordable option, but there's a lot of meat on the bone. Mm-hmm. So if you put a cap on the rent control, or there's a rent control in place, then that basically kills your revenue.
And are you managing these assets yourselves in-house at Jones Creek?
My partner does. So we manage everything in-house, because small mobile home parks, like bigger ones, you can hire an on-site property manager. It doesn't make economic sense. We always have an on-site person or on-site team, boots on the ground for each individual park we have. However, we manage everything in-house. Gotcha. Because we don't think anybody else will care about your asset as much as you do. And we have expertise with the small to medium level mobile home parks, which is a totally different animal from the bigger size parks. So we've kind of developed proprietary technology in managing those parks.
Gotcha. Because I know one of the things that always comes around when I talk to people with mobile home parks, and I had Andrew Keel was on the show just recently. He is a big mobile home park investor, and unlike multi, where I'm in multifamily, where I can go buy 1,000 units in each MSA, right? And you slowly work around, you might have 2 or 3 big MSAs and you've got 3,000 or 4,000 units. Like, that's not uncommon. On the mobile home park side, to get to scale, you have to do a lot more MSAs, which means there's a lot more spread out. Does there ever become a problem with, just being too far out of reach to really keep an eye on what's going on with the park and all that sort of stuff?
I don't think that's a problem. There are always local contractors. Now, there's a limit on how far we go. Most mobile home parks in the rural setting, relatively, you won't find a mobile home park in the middle of Manhattan, for example, right? That just doesn't exist. So what you want to do is you have a 100,000 in population for MSA. So that's the kind of the minimum requirement. It has to be close to MSA like that. With that kind of guarantee, you can have kind of a guarantee of contractors, guarantee of tenant source. So there is a base there. There is economic factors there. So you don't want to be in a town that's dying in the middle of nowhere. Those mobile home parks are probably just need to die eventually, unfortunately. So that there's the minimum requirement for give you let me give you an example. One of the deals that we sold last year, we completed full cycle. We only held it for 22 months, and we haven't really visited the park. We managed everything remote. We have boots on the ground from contractors locally. We built relationship with them throughout the due diligence process. So with that park, we delivered on the project level annualized rate of return 25%.
Wow, that's great. That's fantastic. In terms of how you're finding your deals these days, what are you doing to source deals, keep attracting motivated sellers and all that sort of stuff?
You have to build up relationships. So we have relationships with past sellers, buyers, brokers. Relationships with these people will get you lots of good leads and quality leads. So that's the main source of deals, and it really comes down to underwriting. Underwriting is almost everything. So we have a 15 parameters algorithm that we've developed based on all of the deals that we have, right? So we look at all of our 28 deals, and actually we sold more, but over 28 deals, close to 30 deals we've sold and bought before, and we look at them, and we look at their performance. We pick the best performing ones, the super performers, and we look at them, what's going right for them, right? So we aggregate all of this data and figure out 15 major parameters that made this deal go right. And then we also look at the ones that was, less than stellar and maybe that we were able to turn around, but what really hurt us there? And we gathered these data and put that into the algorithm as well and think about what hasn't worked for that deal. So really those 15 parameters and this proprietary algorithm that we've developed at John Street Capital really leads to the sourcing and the underwriting and the eventual success, because the saying, you make the money when you buy. You have to buy right.
Yep. Do you want to give us a bit of an overview of those 15 parameters? I'm sure it's the same. It's not, like we have same parameters with us, and it's cap rate, it's in-place rents versus, market rents, it's, population growth, all that stuff. Like, so what are you, 15, I only spouted off a couple of there, but what are your 15?
So 15 is a lot of parameters, but I will give you top three, right? Top three. The most important ones. If you get those top three right, you're win the 80% of the battle there. So the number one is tenant-owned home, right? What is a tenant-owned home? It means the tenant owns the home on the land. It behaves as a parking lot or an HOA, what the asset is designed for. So the tenant owns the home. They take care of the repairs and maintenance within the home. They take care of their own lawn care. So it really pushes the expenses on them. And the tenant-owned homes usually has more private ownership. So the private ownership boosts the appeal of the neighborhood, which is really what you want in a parking lot. Because if you are the owner of HOA and you collect HOA fees, it's really like that for your neighborhood. You want your tenants, your residents in your neighborhood to have a good private ownership, take care of their homes. And, if they're able to afford a mobile home, they usually is proof. It's their track record, per se, of owning a home. More responsibility, more financial stability and capability. So the number one ratio is that it has to be tenant-owned homes. Doesn't have to be 100% because parks, some parks just come with park-owned homes. So we want 70%, 75% and above tenant-owned home ratio in the park. That's minimum requirement. That's number one, most important thing. If you don't take away from this anything, it's a tenant-owned home. Number two is utilities. Right. So the biggest money loser in mobile home parks is utilities. If you have a leak break, you have a water break, if you pay for utilities, it's just going to drain on you. So utilities, we prefer public utilities, public water, public sewer, septic tanks, okay, depending on their age. Probably not well, definitely not treatment plant or lagoon for sewer, because it's just too risky, especially for a smaller park, right? To replace a lagoon, $1 million out. So what are you going to do about that in a smaller park? It doesn't make any sense. So you have to stay lean if you're in this niche. So public water, public sewer. That's number two, utilities. Number three is how the utilities are paid. Actually tied into the utilities, how the utilities are paid. The best case scenario, you want them to be able to sub-meter. They're sub-metered, billed directly to the tenants. And the second best is that the owner is already collecting the utilities from the tenants. But be careful with that because a lot of times the broker in the brochure or the sellers will tell you that, tenants pay for utility bill back to tenants, but they're actually not collecting that much. So you got to verify that. So those are the top three. If you master those top three, you're 80% there.
Awesome. I appreciate that. Do you ever go in and do sub-metering on properties yourself? Because given sub-metering isn't actually that expensive if you know what you're doing, and particularly if you have a smaller park, you could potentially go and be the value add by doing that. Do you do any of that sort of stuff?
That's a big value add. Yes, is you can raise lot rent or you cannot raise lot rent and push back utilities. So a sub-metering, there is a program called Metron. They do financing as well, so you can actually do financing, do the sub-metering. So you have to do that.
Yep, that's awesome. Well, thank you so much. Quick question, pivoting to how you're raising your capital. Are you attracting any foreign nationals from China right now in terms of your investment strategy, or just purely focused on raising capital here in the US?
From the US, American citizens, accredited investors.
Any reason why not? I get a lot of people. I wrote a book called Investing in the US. About how to invest foreign. So I get a lot of people coming and asking me. I assume people from your home country as well would want to come and say, "Hey, Charlotte, how the hell do I get involved in your deals?"
Yeah, right. So maybe I became too American, so I actually lost some ties with my home country. So, but however, I would say, we're not technically against it. I've got Chinese investors on board, but they live in the United States.
Yep.
But it doesn't. So if you live in China, China is actually a special case as we're entering into the new Cold War era. So if it is a different country, Canada, Australia, France, Germany, Italy, wherever your listeners are from, Malaysia, Singapore, I don't care. But with the governmental tension that, the spy balloons, the new Cold War, the things that's been going on in China, the policies they're making, it makes this process extremely complicated for both Chinese and US firms to work together. For example, if a Chinese citizen wants to do American investments, it's actually not possible. The government caps you at a certain dollar amount. They don't want money to flow out of China. So if it is any other country, this is a completely different story. China, we're having a Cold War, so it's difficult. You'll be thinking about doing a business with the Soviet Union back in the Cold War era with the United States, which is very, very difficult and maybe not a very smart move.
Yeah, no, but it's also a lot of, and I'm not saying China's developing, but a lot of developing countries have a limit on how much money foreign nationals can take out of their country because of their dollar and their weakness. If there's a flight of capital out of the country into safer Western countries, it devalues their dollar and it obviously hurts them. So places like South Africa, Pakistan, China, these types of places have limits on how much money can come out. India, I believe, has it as well. And the only reason I know that is because I've spoken to a lot of foreign nationals about the want to invest in US dollars or the want to invest in Western countries to protect their money against, governments coming and taking it or, and just having a hedge in US dollars or something like that. So it's very, very interesting. And I'm sure as you grow, you're probably going to get more people coming towards you and say, hey, Charlotte, how the hell do I do this? But awesome stuff. So quickly pivoting to, as we wrap up the show here, what are you seeing in the economy? What's your sort of 2 cents right now in where we're headed? How is that affecting your business? And what are you doing to pivot, if at all?
Many say that we're heading into recession. And the pattern of how the Fed has been raising the rates reflect that we are going to a recession. And that's correct. So what I would say is that the last time we went into a recession was 2008. That started that lasted about a year and a half, 22 months, and the rate went up and up and up and dropped by 4 or 5 points when it went. So I expect the rate to drop whenever from the start of the recession to the end, maybe 2024, maybe 2025. So it would drop. So right now is really you need to hold on to your investments or buy more investments because the cap rates are rising because interest rates are rising. So there are good buys out there, get good bargains out there. Remember, if the cap rates are rising, interest rates are rising, you need to buy. So you start investing in good assets, right? And when the interest rate falls, then it's the best time to sell. So you have to follow the pattern of the Fed rates and macroeconomics. So from, I don't have a crystal ball, but from what I know about economics and finance, the background that I have, I expect it to drop in the next a couple of years or so. So I think this is actually a great opportunity for those of you who want to make a lot of money. So, in 2008, it created many, many millionaires. In 2000, in the dot-com bust, it created many, many millionaires. So you just have to grab your chance and see the pattern because history repeats itself. And I would say for mobile home parks, particularly, it is one of the best recession resistant assets because when in a economic depression, a recession, mobile home parks actually attract more tenants because we'll get more phone calls because it is a less expensive, it's affordable housing option.
I completely agree. I'm buying assets right now. The hardest thing I've got is attracting equity because equity is, particularly from the retail space, it's tough. People are seeing the headlines. But the fact is cap rates have expanded 150 to 200 basis points literally in 12 months, right?
Yeah.
And so you can pick up assets at 6.5 caps, even on good multi.
Yeah.
Where that would have traded for 4% 18 months ago.
That's right, yeah.
So it's, I'm trying to tell investors like, guys, this is when you need to buy. Lock in the interest rates, know that it's going to drop eventually. Because the US can't afford to keep them high because they've got to pay debt on their own money, right? So that it's going to be, and we've got an election around the corner, regardless of what side of the aisle you were on. Elections will cause some movement in interest rates, and that you can look back at history at that. So, Charlotte, with that being said, really, really thank you for coming on the show. What we'd like to do at the end of every show is dive into the top 5 investing tips. You ready to get into it?
Let's do it.
Question number 1 is, what is the daily habit you practice to keep on track towards your goals?
Keep reading books.
Yes, I love that. Are you a physical reader or are you a audiobook listener?
Both.
Yeah. I'm personally, I need to read a physical book because it helps me go to sleep at night. And
That's great.
Yeah. Question number 2 is, who's been the most influential person in your career to date?
One of my Georgia Tech alumni network. He was really my mentor. It introduced me to many good connections that really helped me with the business and provide me lots of mentorship, really, in finance and in business.
Question number 3 is, what's the most influential tool in your business that you can't run it without? And it could be a physical tool like a phone or a journal, or it could be a piece of software that you just can't, the business will not exist without that tool.
There is a software that we manage our investor portal with. It's called Update Capital. And with that portal, our investors can log into their own account to view their investments, distributions, documents, and all the other good stuff. So it's a really great interface to keep investors in one place, kind of their stuff in one place, and they can log into their account, kind of like your bank account, log in as well to see your investments.
That's on the equity side. On the management side, what software, any particular software you use, given the parks are so spread out across the country?
Mm-hmm. So we don't use a particular software for that. We have our internal workflow. It's all a teamwork, right? So your company is a team. You have your talents, you have your assets, those people who work for you. The best tool is to have a workflow process where it talks about when this happens and a chain of command. Really, you need protocol, you need processes. So I would say the most important tool you need to develop, and it's different for every company, is a tool that defines your process.
I love it. I completely agree. And that's so important as you grow. And you mentioned people are assets within the business. Your employees, they create the teamwork, so to speak, so you can help keep striving towards your goals. Question number 4, in one sentence, what has been the biggest failure that you've experienced in your career? And what did you learn from that failure?
When I did my first deal, I had to evict the first set of tenants I ever took in. I was they would say green, very newbie. That was my first deal, right? That was many years ago. And what I learned from that is that a tenant is actually a business partner. When you sign that lease agreement with a tenant, you're entering in a business contract with that person. You want to make sure that this person is not a bad actor, has good moral compass, has good financial stability, responsibility, and that can be traced by their track record. So you want to do that background check. You want to talk to them. You want to interview them. You actually want to check their business references. It's like hiring an employee, entering a business contract. So the worst thing you can do to yourself is that you have to evict them. It actually hurts everybody. The only person who wins in an eviction is the eviction attorney because he's the only one making a lot of money. But if you've gone through evictions before, you know the pain. I would say the biggest failure and lesson learned, biggest lesson learned. And I'm very, very fortunate that I learned that money. I learned that lesson on my own money in my first deal. And I failed when I made that failure when I was young, and I corrected myself quickly. So from then on, we have a very, very stringent process to having new tenant board. And ever since we implemented the process, we've seen big improvement. They're really your stakeholders. Be careful.
Yeah, no, I love how you've changed your mindset about it. It is a business partner. I think it's so important and probably one of the biggest takeaways I'm taking away from this. With that being said, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
That's right. The best way to reach me is to go to our website at johnscreekcapital.com or reach us directly at info@johnscreekcapital.com. And like I said earlier, I think I don't want to mislead anybody by saying that I don't take anybody from a foreign country. I just mean China. It's a different story right now. So if you're a listener and if you like to know about us and you're in a foreign country, not China, reach out to me, please.
Awesome stuff. Well, look, Charlotte, I want to thank you so much for jumping on today's show. Just some of the things that I took away from today's show. I think that the number one nugget you just dropped just then was about the tenant is a business partner, right? And reframing the way in which you approach that person, and that it is a business contract, and you need to do the background, and you need to make sure that you're doing everything you can to keep that person, and they're going to pay their rent on time. I know I go through a lot of evictions, and we're going through a lot more now as inflation is still remaining high, and it's hurting the bottom dollar. I also love your tenacity to come to the US at 16 years of age. I think that's a freaking awesome story. You moved here without, you had a dream, you had a vision, and you moved here at 16. Most 16-year-old kids would not have done that. It comes with sacrifices, obviously not being able to see your family, which I know personally is hard. I hope you get back to China as many times as you can to see mum and dad. And if they're listening to the show, hello, mum and dad from the US. Hello. But with that being said, huge thanks for coming on today's show. We really enjoyed the conversation. Did I leave anything out?
No, it was perfect. Thank
awesome
you.
Stuff. Well, thank you so much for dropping on the show. Enjoy the rest of your week, and we'll catch up very, very soon.
You too.
Well, there you have another cracking episode jam-packed with incredible information from Charlotte. If you do want to jump on her website, remember it's jonescreekcapital.com. And you can go and visit her by also emailing her at info@jonescreekcapital.com if you're interested to learn more about her mobile home park investing, or just be in her sphere and just learn a lot more about what she's doing, because she's an incredible talent here in the commercial real estate world. With that being said, I want to thank you all for taking some time out of your day to tune in to continue to grow your financial IQ. The easiest way to give back to this show is to give it a 5-star review on iTunes. We're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.